Good morning, good morning. See if we are streaming here. How's everybody doing this morning? Hey, Travis, how are you? I'm going to do a quick session today. It's actually a holiday in the UK. Hope everyone had a good Easter. See what we can look forward to this week as we come into a new week. Hey, Kevin. Yeah, it's probably not a lot of people thought I was going to do a session today, so I'll get right to it. And let's see what's happening here. Larger sort of sense is we are in a large balance zone. The top is it's a discount zone. Our balance zone. Let's start at the beginning so there's no confusion. I did a balance zone and it's back adjusted for the old contract to the new, and it was 56.23 to 57.02 quarter. Double it down to 54.65. Double it down again to 51.48. And we've been going like this, trading in this big range right now as the market looks for stability. After markets have gone through what this one has gone through, particularly with these large ranges, this is not normal to have a range that is 500 points in one day. Um, for those who are new to finance and new to trading, and that is not a normal thing to happen. We are not undergoing normal market conditions currently, because economic policy is changing on a daily basis. So the market has nothing to anchor to. Hey, Moran, how are you? So when it's like that, you drop a market on its head, it's going to stumble around for a bit. We had some short covering off that low, and then now we're just, if you look at the zone, 64 and three quarters, basically 65 to 51.48, the middle of it is 53.06 and three quarter. Now, if you look at the high for the evening is 53.06 and three quarter. So the zones are working nicely, right? The overnight high is exactly that level. So I know that the levels are working on a larger scale. What we're looking for, the theory of rotation, and you're asking me rotation, but nobody tells you what it's rotation of. It's the rotation of the inventory. So there was product taken in when we liquidated, right? And that liquidating inventory was resold, right, into the retail and short covering flow for profit, right? And now we've put it back on sale and we're right now underneath the middle of the range. So the targets for larger traders are, if we take out this area here, 52.51, right? That is a swing low. If we take out 51, what's going to happen is that the product above it is going to be vulnerable to hit the market. Okay? When I was doing deals, right, you had to hold the price of a security over a certain level. Otherwise, the retail and the buyers and swing longs that you put in to that product, they are going to come dumping out of it so fast that it's going to make your head spin, especially in a market where it's speculation, right? This is not a buy and hold market. This is a speculative market. If that doesn't convince you that it's a speculative market, I don't know what does. Okay? So these people are not, you could think of them, they're speed dating their positions. As soon as it takes out 51, anyone who's long above that low, they're going to start coming out. And then the lower levels will be 27 a quarter, 51.87 half, and the ultimate target on a look above and fail is 51.48. So for those who are short, right? Traders who are short, your big level, that is your piñata low, okay? Because you break that low, the piñata cracks open and the candy falls out, right? Now, here's another thing. Just because that low breaks doesn't mean everything's going to fall out, because we don't know the buying retention until we test it. So it might do a look below 51 and fail, right? If there are enough buyers hanging out down here, right, it'll break that level and they'll come running in the door and will support again. That's why some people, when they short a low, they automatically get stopped out. Watch for the reaction, right? Watch for the reaction. You don't have to be first in these ranges. They're so huge, right? You can make a lot of money in the middle, right, for longer term traders. So let's see if we take that out in the overnight and in regular trading hours today, right? That's what you're looking for. If we stay above 51 and then we go and stay above 67, and if by any chance, because overnight inventory now is 100% short, right? Now, for those of you who don't know that, I know I'm going through a lot of stuff, but it is Monday, right? And we all have weekend brain because we haven't traded for 3 days, right? Some of you might have traded in the overnight. I haven't. I was traveling. And so here's the deal. Watch to see if that overnight low gets tested and 51 gets tested. Okay? If it doesn't, overnight inventory is 100% short, which means all of the trading is underneath the previous day close. In fact, it's gap short, which means it was a gap between the close and the high, right? Now, a true gap is when you open outside of the range, but still this tells you that there was selling in the opening auction. There is no bid support on a Sunday night of a long weekend, right? Which is good because it allows anybody who's short, up here to do some covering if they're around. Volume is low, right? Volume is low compared to the other nights. So just watch for that. 51's your big level to the downside. If you don't get that, we're going to rotate back up because inventory is short. Let's go take a look at a more detailed view and then draw out our balance zones like we do every single time. So this is my TPO chart, which is a little more detailed. It tells me where all the stops are in the half hour. Right? There's our overnight low. There's that 52.51. It's not a previous day low. That is a swing low for me. Right? What I characterize as a swing low is a low that if you break that, anyone who's using that as a stop on a larger time frame, larger account trader, they'll start questioning their, there's a certain point where your trade and you have bigger slippage and bigger margins of error on larger trades. Like if you're trading $100 million, it's different than, us who are trading 5 grand, 10 grand, whatever. So, there's a different margin of error, and if that margin of error gets broken, that invalidates the trade. It means the business reason for going long over 51 means nobody needs to sell under 50. Once they start selling at 50, why would you be holding inventory, right? There has to be a business reason for the trade, and you have to be able to explain it, right? That is why there's a lot of talk about, why trade, why you take this trade, that trade. but they don't tell you why the trade works, right? You should be able to look at a trade, a chart pattern, whatever you're doing, right? And you should be able to figure out why it works, right? Yeah, because it's a chart that's representing a set of business transactions, right? So people randomly don't do business transactions. I'm going to go buy 1,000 units of this just randomly. Make sense? Right? My clients are going to go spend $100 million on something just randomly. That doesn't make any sense. So if the chart is telling you how the transactions are going, then why would you not trust the chart? And I think that's a lot of the problem that we have when we're trading. We get caught up in it, especially like me. You know, when I first started, I was always short biased, just always short biased because I was always a liquidator. Then I realized that the liquidation in these markets happens differently, right? And because there are no insiders liquidating, the liquidations here don't really last that long, right? This is the first major sell-off we've had in a long time since COVID. And you can think about that. That's quite a bit of time. Now, I'm looking at the balance zones for my 1 minute chart. Right, I'm a little rusty this morning. So I'm looking at that high, that high. Then I look at these lows here, and I see when you can't break those lows, you go right back to that high. You see that green candle there? Right? That's what I call two-sided trade. Well, not me. That's what the industry calls two-sided trade. Right? And that means the market makers are just doing business in this blue zone. Sure, they got some buyers. Now they're selling it. They got to put it on sale. Let's see if 67 works. So after 3 days of no trading, I am definitely going to ease myself into this market. No reason to go nuts, right? But if you are an aggressive trader, right? I always talk about being careful, but a lot of you aren't. And for those who aren't careful, right, I'm going to do a bit of, right, for those traders who trade sort of like shoot from the hip, how can you minimize your losses when you're wrong, right? Say you're a trader, like some traders are just like adrenaline junkies. Some of them have no self-control. But I've found that preaching to them doesn't help. So how can we help keep your head? If you're one of those traders, I was thinking about this weekend, right? If you're one of those people who gets really emotional, right? Who just, you know, it's like when I was a bouncer, I'd see people, you know, they'd be in a fight, they just close their eyes and start swinging. They didn't know what they were going to hit. How can you keep your head in that? Now, a lot of people say don't trade, blah, blah, blah. What if there's a huge number of people who trade this way? So let's see if we can help them at least minimize their losses, right? Now, say you're a buy the dip kind of trader, right? And you always want to catch the bottom. Here, let's check this out. Let's dig into this and see if we can help you, right? Because everybody tells you what you should do. Let me try and go, you know what? If you're going to do it, watch out for this. Because people don't change, right? So if you're looking to buy, right, here's the deal, okay? Straight goods. If that low here, this one, of this red candle, right, if that low under 66, if that goes, right, you're more likely, and if you're long, right, where's your next point of reference, right? At least if you map out these trades, you see these lows here? You guys see these lows? If that thing takes out that low, right? If it takes out that red candle, and then it goes and takes out those lows, right? You could probably hold it if it takes out the red candle, right? For those people who don't have strict loss limits, right? The more stricter traders, you know how we do things, right? But what if, you're a trader who just loves to go and buy, and you're long already? Like while I'm talking, you're long. Well, this level here, right? Where is that? Just under 65, right? You're going to be in trouble if it takes that level out. So normally we'd be waiting until it gets over 67, and then it's going to be a seller at 70. So if you're buying in this area right now, and you're a jump the gun kind of person, right? You're Johnny on the spot, right? You're jumping the gun and you're in there. Well, how do you manage that, right? Here's the deal. At least if you're going to jump out of planes, take a parachute, hey? Right? 65, right? You're going to lose a little bit more money, but at least if it breaks that area here, you're probably going to come down to 60. Now, do you want to take 5 points of heat or 6 points of heat or 7 points of heat? Okay, there you go. Right now, you have some tactical understanding, and try and drill that into yourself over time. Do it every day. So if you are going to take, those cowboy trades, at least you're not going to blow up your account, right? So put in a stop, like say you're a big cowboy. Put your stop in at this candle here, right? Say if you're one of those people who loves to lose money, right? And then complain about it. Put your stop underneath 60, okay? That's where you pull the ripcord, right? Here's where you can screw around, right? And you'll lose money. But this way, if it breaks that, at least you'll still have your account. Now, is that helpful? Because we want to make the information in a trading room helpful, right? So we've gone and changed our name from Microefutures to the Trading Syndicate. It's hopefully easier to remember. Kind of rolls off the tongue better, right? And then if you are long, right? Okay, so if you're long and you come into this level here at 71, I'd be selling. What if you're a greedy bastard? Where's the greedy bastard target, right? So regular businessman target is here, right? So say I was long at 68, 67, 66, I'd be selling into the 70s, right? Now what if you're a greedy bastard trader, right? You're always swinging for the fences. Well, here's the deal, folks. If we hold 70, then we'll come and take out these sellers here, right? And your ultimate goal is a rotation up to 73.5, right? Let's watch and see what happens, right? So I've always been of the don't do this, don't do that, don't do this, don't do that. And people don't like hearing that, right? They are degenerates, right? So degenerates, we're coming up to the first stop on the subway train, right? There's going to be sellers at 52.70, right? Why? Because that's where they initiated before. There they are. Because as a seller, myself, right? If I was a seller at 70, it comes back up there, I'm hitting you in the face. Now, if you're long 67, or even if you were long under 67 and you jumped the gun, that's not a bad trade. Sure, it's not private jet money, but you could pay the phone bill, right? Now, if you are, like I said, a greedy bastard trader, right? So there is, the regular business strategy is to sell into this strength. Greedy bastard is to hold it through these levels. So, how about this? right? If you are a greedy bastard trader, why not be a smart greedy bastard trader, right? So if the market can't take out these levels, then be smart and liquidate. But if it can, then you can go full on greed. How does that sound? Now, the guys in the room are probably wondering if I got abducted by aliens. But I've been thinking about this, right? We've got to have real world strategies. There's no sense having trading psychology and all of this stuff and talking about setups and if then statements and all of those things if you guys don't use them in a way that matches your personalities and in a way that matches actual human behavior. I don't know. Just a thought. So if you're going to trade like a degen, at least be smart about it, where you're not blowing up your account all the time. Sure, you're going to take some hits, right? And then every once in a while, right, if the order flow blesses you, right, you're going to look like a rock star. But how about we try and de-risk the I'm living in a cardboard box now because I blew up my account. Let's get that out of the way. And then you guys can go play, right? But you're... See, look, the seller's right there. Can you see him? Can you see the seller? They're right there. Look how the market came to like a yield sign. Didn't get there, so the sellers front ran 70. I told you they were going to be at 70. Right? Off a 1 minute candle, no fancy software, right? No nose print, bookworm, all that crap. Look, there you go. We knew that there was going to be a seller at 70. So if we were long at 67, 68, we'd blow it into that 69 and a quarter bids, right? Boom, 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 gone. Thank you. Now, greedy bastard guys and girls. You're holding 67. The breakout is 70. Okay? So here you go, right? So you're long. Now you've lost all of that profit, but that's okay because you're a greedy bastard. Once again, if it takes out 66 and 65, you're still in the playground, right? Right? They would have punched you in the face, but you're still in the playground. Now, be smart. Notice how the market stops selling off before 67, right? That is a good greedy bastard clue if you're still long. Hey, Raj. Is this helping you guys? Give me some feedback here. And the market's moving slow enough now that you can actually see this happen, right? Right? Is that helpful, ZR1? Right? I mean, why try and change your behavior? It's not freaking possible, right? So if you're going to F around, right, at least wear a mouth guard, right? So when you get punched in the face, you're going to knock out all your teeth, right? There we go. There's that 71. Now I would be selling into this like I'd be hitting every bid I see, right? With how much leverage? What do you mean? It's what, $50 to trade a micro, 400 to trade a mini? Yeah, I mean that. Hey, listen, there's another thing. People always talk about risk tolerance. F that. It's risk capability, right? You might say, oh, I've got 50 grand risk tolerance, and you're trading a $2,000 account. I mean, you got to be realistic, right? What is your risk capability, right? If you're trading $2 million, that's a different story whether you're trading 2 grand. So if you have oh, I can risk 100 grand on this trade. Well, do you actually have 100 grand? Yeah, okay, go ahead. Go on. Right? I've got to figure out ways to modify my teaching so it's actually useful. It's not useful sitting there and telling people do this, do that, don't do this, be disciplined, right? So if you're going to be not disciplined, right? Let's give you the tools, right? Let's give you the tools so you at least don't get your face ripped off, right? You're going to get beat up a little bit, but some people like getting beat up. In fact, there's a whole industry catered to that, right? So let's give you the tools, and that's what we're going to try start doing more and more now, right? So when I call out trades, right, I'm going to call out, okay, this is the regular business person trade, and this is the greedy bastard trade, okay? And that way you'll have, you know, two ways of doing business, right? And no judgment, right? People don't like being judged, you know? So now, those of you who held that trade, right, the greedy bastards, they at least were intelligent. We didn't take out 67 so they could stay in it, right? Whereas me, I'm telling every fiber of my being is telling me to sell because I've been a liquidator my whole life. And when I see a customer, I hit that customer, right? I'm hitting that bid. I'm not going to let a buy order go unfilled. But that's me, right? And I've been trained to think like that. Normal people aren't trained to think like that. Normal people are trained to buy the top and sell the bottom. So how do we help that kind of person make money? Buy high, sell low. There you go. Hey, Terzi, how you doing? Right? Okay, good stuff, Howard. Good stuff. It's because I sat there and I was talking to one of my buddies. I was talking to the Golden Bear, and the Golden Bear is a smart guy and he's ruthless. And he's a shell guy. He puts shells together and sells them and does deals. He's made a lot of money. He and I both started at the same time in the business. I went trading. He went with the promotion side. And I was talking to him, and he's like, "You're still doing this, trying to teach retail people?" And I'm like, "Yeah." He goes, "You're preaching at them, aren't you?" I'm like, "Yeah." He goes, "How's that working for you?" Not so good. So no more preaching, right? No more judgment, right? If you're a degen, welcome. Right? Now, I can see that there's a seller at 72 and a half, 72 and three quarter. Right? See? Look at the tops of those candles. Right? Now the offer lifts. Let's see if we can get a print. Is anyone actually going to buy it? No. See? Now we've got that barcode, right? They stop selling at 72, 71 and three quarters. They initiate at 72 and three quarters. Now, why are they doing that? Because they're working with the customers they have at the moment. That's why the market's doing this. For me, I'd be out, right? I would be out. But some people hold on for that 73 and a half, right? But hey, if I was long at 68 and selling at 72, I'm perfectly happy with that trade. Now, for the greedy bastard traders that are holding it longer, right? We're starting to run out of steam a little bit. You see how the offer is coming back down? If you were long and the offer gets back under 70, there, see? That means they're going to put it on sale back to that miniature cost basis between 67 and 69. At least this way, you guys have the information and you can make your own decisions, right? Instead of somebody preaching to you where you should get in and out. Because you're not going to listen to them anyway, right? You know, it's like I've got to be able to reach more people and actually make the information like usable and understandable for somebody who just walks in off the street, who's never worked on a trade desk, right? The hardest thing, like I'd started in this business and people would go, oh, let's see if we can get over 72 and 3/4. See how it hits that? Right? That's where the parking brake is, right there. Now, do you guys see that with a 1 minute candle? Like it's like I slapped you in the face with a fish. It can't be any more obvious than that. You don't need any kind of software other than a 1 minute candle, right? You can see that there's a seller at 72 3/4, and they are banging into this, right? And we looked underneath that 69 and came back up over it. So they stopped selling when they got underneath this. So when you guys look at a market, keep that stuff in mind, because if you're a degenerate trader, right, and you understand these things, then you can maximize your profits and minimize your losses. Right? Say you were still long from 68, 67 on that dip under 67 and the look above and fail of 67. And you're like, no, I'm going to hold it because I want 8 points on this trade. You know how people are. When will they be done selling? That's not the question. They're never done selling. They're never done selling. It's whether they have to put it on sale or whether they can raise prices. Once you understand that, they're never done selling. They are there to sell. That's their job. Liquidation of inventory, accumulation and distribution of inventory. That's why they call it a market. And now we're back into that cost basis. Slapping with a fish? I don't know. I'm trying to get people to visualize me slapping them with a fish. So by now if you're still holding on, to this, like the smart money's gone. They're in and out. Now you're like, I'm on my 15th Red Bull and I'm still holding on to this trade. Well, the same rules still apply, right? The rules still of that trade still apply. That because the premise of the trade is that you don't take out that level. So for you, the degenerate trader, we went and we made our money, right? ZRN went short, beautiful, because he saw a seller, right? Nice trade, well done. I didn't even call that one out, well done. But those who are still long, the premise of your trade is 65, under 65. Well done, ZR1. You saw the seller and you shorted into it. Yeah. And look at his risk. He was short 72.5, stop 73. And I'd put some bids down there at 67.5, 67.25 or whatever, right? And tag out there. That's a beautiful trade. Now that's trading the way you were meant to. Beautiful, right? And let me talk about that for a second, because what he did was I kept saying there's a seller, there's a seller, there's a seller, right? So he shorted with the seller because he said, oh, Listen, if they're selling, I'm going to sell some. And if they stop selling, here's my risk. And that's rotation back down. So we looked below 67, failed, rotated up to 72 and 3/4. There was a wall of sellers at 72 and 3/4. You can see it. So the market went back on sale, and now they're right back. And look where they stopped. And people tell you not to trade Globex, and you can't learn anything from Globex. I hope you guys learned something there. Right? This is useful information, and you can actually use this to put on trades. Well done, ZR1. That's it. And that's how you trade rotations. Right? We stopped selling around 67 and a half. Offer is lifting. Now, when we get up to 60, 69 and 3/4, you're going to expect a seller. Look, there's a seller right there. See? There they are. You guys see that? There they are. And there's where they stop selling. It's a good question, Armdeep. When will they be done selling? Never. They're done selling when the market's closed. Why do they turn the tap off? Now think about this. I want you to close your eyes and imagine you have 5,000 pieces or units of something to sell. If you see a whole bunch of people coming in to buy, wouldn't you raise price? How do you see there's a seller at 73? Top of the candles, my friend, right here. Good question. And welcome to... See? The top of the candle is initiated by sellers competing. Because you're not the only seller at 72 and 3/4. Right? You're going to have competition. And competition between sellers is why price goes down. Not because of short sellers. It's competition between sellers that pushes price lower. Competition amongst buyers pushes price higher because the sellers will naturally raise price. Right? That's just business. People forget that this is a chart of the sales of a product. They're raising price to match the order flow. Do you ever wonder why they call it market maker? They are making the market. So if a lot of buyers come in, you can raise price. It's a good day for business, right? Say you're selling bananas, right? And you bought your bananas for a nickel a piece, 10 cents a piece, right? That's your cost basis, right? And then 3 Greyhound buses with people with monkeys get off, and they're all banana buyers. Hey, Jersey, how you doing? Welcome. You're going to raise price, right? Make profit. Good day at work, right? And then, you know, you get 3 buses with people with dogs, they're not really banana, they're not big banana eaters. So you're going to have to lower price to sell it to the humans. Do you get what I'm saying? It's really that simple. Execution is not simple. Execution should be simple, but it's sure as hell not easy because markets change constantly, second by second. Great question. When the market maker runs out of inventory to sell, they short it to the client. Could we use a new balance zone from 67.5 to 72 and 3/4? Yeah, yeah, sure. Definitely 0-1. Definitely. All right. Now for your degen traders who didn't hold that, who didn't sell into strength, now you're starting to get flushed out. Now, what if you're a person who never uses stops, right? I'm going to address the whole bad apples here, right? What if you're a person who trades without stops and you were long here, right? You were long in this area here. You didn't sell here and you're still holding that position. Well, that's where your pain's going to be, right? That's where you're going to hit your maximum pain, is that 58 level, because if we take that out, they're going to take out the overnight low. And if you're taking out that overnight low, you got to be careful, right? Because, right, that's where you're going to blow up your account. We don't know what's down here between 59 and 51. And I really wouldn't want to get in the water there. I don't know if there's sharks, right? I don't know. But that's, you know, that at least gives you some options, right? Because we have a lot of people here, you tell them use stops, they don't use stops, right? They like that thrill, right? They like trading without stops. For them is like playing Russian roulette, right? They love that spin of the gun and the click, right? They're addicted to that feeling. But hey, right? That low, here you could still hold on, but realize that once you get to that blue line that was support before, it's going to be resistance because everybody's trapped long above it. Right? So what did we find out? Now, those who haven't traded, we know that the balance zones work, right? You could even do a new balance zone like ZR1 said, if you feel like it, right? Now, here's the thing. If we don't take out that overnight low, we will rotate back up, okay? And if we get over this 65 level, there's going to be a seller at 67, just so you know. So you know what you're going to be looking at, so you're not completely blind when you're trading. So at least you have the tactical knowledge, and somewhere in your brain, it'll fire, and hopefully you'll retain this information. The best way to retain this information is by doing these trades over and over and over again, right? It's the repetition, right? Do you guys see how now there's a seller at that blue line? So say you're a trader, you're a bet it all on one color in the casino kind of dude. You see that there's a seller there. Do you guys see that the sellers are initiating here and pushing price lower? So now at least you have some tactical knowledge, right? If you're doing the Hail Mary trades, right? You put on a trade and you start praying. I know there's traders who do that. I've seen them, right? And if you're long, now you're getting into your pain zone. So do you really want to hold it and blow up your account if it takes that out? That's up to you. No judgment. But at least now you know where everything is, right? So you alone can take the responsibility to go, I'm going to blow up my account, or I'm going to get out and still have a couple of bucks left. Nice trade on the short, Kevin. I mean ZR1, sorry. Now there should be some responsive buying when we come to that overnight low. If it just breaks through there, that means that the low has seen a large seller and they're just getting out of the way. The only people who are buying here are going to be short sellers who are covering. Nobody's going to be buying to build a position here. So if you are buying to build a position, you are depending on short sellers as your best friends. Hopefully this makes sense. Any questions? Good question. Is it easier to identify sellers or buyers? It's more important to identify sellers. Don't worry about the buyers. The sellers are the ones who are setting the price according to how much buying is coming in. Let me repeat that. The sellers are setting the price according to the amount of buyers that are coming in, the customers, or as you guys love to say, order flow. The sellers see that order flow before you do. So when they start lowering price, pay attention. Now you see how they stopped selling at 60 and a half and now they're raising price. Do you see that? So what you want to do, see, I was expecting a seller at 63. Those sellers saw buyers and they raised price. Let's make this something you can see, right? So let's say this is the ask, right? This red line. If the ask is moving higher, it means the sellers are seeing customers and they're taking advantage of that. If the ask is moving lower, it means the sellers are competing to capture the buyers. Don't worry about the buyers, right? Watch the sellers. The sellers will tell you everything. Not just easier, it's more important. Don't worry about the buyers. The buyers are the consumer. Worry about where the product is being priced. No, I love the look below and fail VS. When when the sell orders are done, you go buy a little and then sell into strength. I like that. I miss a lot of short trades. Over the last 5 years, I haven't done much shorting. Primarily because the market's done nothing but go straight up, and I like to trade with the flow. Um, you don't worry about the buyers because it doesn't matter in business, Ben. Worry about the person who's setting the price, not the person who's paying it. The person who's setting the price, if they set it high, it means there's buyers. If they set it low, it means that they're competing to capture the buyers. That's all there is to it. It's really simple. I've been the seller my whole life. Any type of environment. See how they started selling here, and then here, and then here. So when that next candle opens, let's see if that downtrend on the 3 minutes continues or they get back up over 63 and 3/4. That'll tell you. Here's another rule that you want to write down. Never short a rising offer. Never go long when the offer is going lower. That'll help keep you out of trouble, right? And when the market gets choppy, go for a coffee. Oh yeah. I mean, I when I started, I was purely market profile because I didn't know. I read somebody gave me that book on candles, and it was like the Old Testament. I was like, there's no way I can memorize all this. And how do I memorize this and actually run trades, right? So then I found Dalton. I started his stuff, but he didn't tell you like he because he teaches institutional traders primarily. That's where he comes from, and so he assumes that people know what to do, but they don't. So I took what he did and I kind of brought it more to the street, like to Main Street. How do we know if there's short-term traders or long-term traders in the market? The size of the ranges, Travis. Okay, now we're going exploring, right? I don't feel like being Jacques Cousteau, so I'll let this thing go explore, right? ZR1, if you're still short, you're looking for 54. Did you read Steve? Listen, no, who's that? Sorry. Now, do we look below that old overnight low and come back up over it? Like now? You see how it's like see how the offer looked underneath the old overnight low, put in a new one, and then that let buyers in the door. So check this out. And this if you can visualize it will help you, right? So pretend this is Walmart and we had a door that was closed here and we had buyers pressed up against that door, right? So when we opened that door by taking that low, the buyers came rushing in. Now, how many buyers are going to rush in? Well, we don't know. That's why we sit and kind of watch. Nice trade, ZR1. That's well done. It's really well done. Beautiful. It works, huh? Nicely done. That was a beautiful trade. Now the trick is keep that money through the rest of the day. Right? That was a beautiful, beautiful textbook trade. Started shorting at 72, and he covered his last one at 60 and 3/4. Is it, Travis? 5250 is the halfway area of the 500-point day? You know what? I never noticed that. Good catch. Thank you. Yeah, where is half back on that 500-point day? Jeez. Ah, you're right. Half back on that day is, yeah, 49 and 3/4, right? Or is it 50? No, it's 50/4. You know, it's something I haven't used lately, but with a 500 point day, duh, JJ, you should have been. There's something I missed, right? A little bit of weekend brain. So what Travis is talking about, halfback, is a weird, fancy Chicago way of saying the middle, right? And it's this little white letter here, and it is 52. Where is it here? There it is. Why is it white there? There it is. 52, 49, 3/4, or is it? No, 50 quarter, right? And you'll notice that really good spot, Travis. Thank you. Right? Notice that there and there, we did not take out the middle of that range. So that's why we're having short covering, because we're still in distribution, right? We're still in distribution above the middle of the range of the 14th. Well done, Travis. Good eye, man. Good eye. Right? So that's a natural place that we are going to have short covering, which means bids, right? Yeah. So ZR1 for you, that 50, right? That's that's your playground between 61 and 50. Because if it breaks 50, I cannot guarantee it's not going to go to 27. Right? Let's see what happens in this overnight. And the one thing that's going for you on the other side of the trade, right? He jumps right back in, right? Is that overnight inventory is 100% short. So what he's betting on is that 51 doesn't break and we get that covered overnight inventory, right? That's what his trade, the business reason for him going long now is that if we don't break 51, it means we don't have to sell under 51, right? And the market will rotate back up to naturally correct inventory at least a bit. Make sense? Does that make sense to you, ZR1? Now you know the business reason for your trade, and you can manage your risk appropriately. There you go. Nice. Nice. 57? There you go. Yeah, you don't want to give back all the money you made, right? So, good money management. Good money management. Tapping on that low again. Jeez. Yeah, these sellers are still in there, right? For me, oh, what did I forget? Sorry, folks. Forgot to draw something in important. There's that lower stop. Let's see if we get back over 59. That lower stop here at 54, that's probably your last, right? If this, that's your last line of defense before that swing low, right? So 54 quarter, big level. That's the parking brake. If the parking brake goes, you're down here. And that's it for me this morning. I went longer than I thought I would. Thanks, everyone. Have a wonderful morning, and thanks for joining me. We'll see you at 9 a.m. Eastern Time. Thanks, folks. Bye for now.